Hello, trading addicts. Good evening. This is Jeff Kohler, aka the Option Addict, from over at www.tradingaddicts.com. Also, tab blogger for ibankcoin.com. Coming at you tonight with the weekly watch list. In the past, we haven't spent too much time on market setup, but last week I blogged about and spoke about a particular series of events that would likely set up heading in towards the end of last week. And a couple of things we threw out were the topic of McClellan's and potential market divergences, which all set up as of Friday, which I'd like to point out. So I've got the chart of the S&P here in front of me, okay? And we got the rug pulled out, market breaks down, especially into the last hour of the day. Ran all the way back down to this balance area that we had been talking about over at Trading Addicts of 1630. Closed right there on the spot. What's interesting about that, and I don't know if anybody have noticed, but take a look at the difference here in the S&P, especially with last week's lows. So the S&P clearly took out last week's lows without a problem. But if you take a look over at the Russell, and when I talked about divergences that would set up, I said you'll usually see this happen in either copper, volatility, or in the Russell. So what I pointed out here in last week's lows compared with Friday, you look at the Russell. Russell didn't even take out Wednesday's low. So there is a divergence going on here with small caps. So why is that important? Why is that something that we look at? Why call out the Russell? The Russell is a measure of risk. Now in the last little stretch, we've seen things like high yield. Japan EWJ have just been getting smoked lately, right? And so that's got the market kind of little concerned about the possibility of a correction coming, right? The other element that I threw out, I said there's going to be a setup where when the S&P does break down, we're also going to see the McClellan, which is an indicator that I use religiously, get down into oversold territory. If you go back and you study, in fact, I posted a chart of this on the blog, but you look, and every time the McClellan dips down underneath 80, that has marked a significant pivot point and a significant buy the dip point in the markets. So that's something that I'm looking at. I'm thinking, okay, well, number one, we've got an oversold McClellan. Number two, I've got a nice little divergence set up here with the Russell and the S&P, where the S&P cratered, took out its lows, the Russell didn't. And to that same point, we've been talking about copper, and copper's still coiled up here, hasn't broken down. In fact, trading really well, up a little bit, up near last 2 weeks' highs. Okay, and up against a really important balance area, which we know is a 340 is an important point of control for copper prices over like the last decade. So not suggesting that this is an all-out bullish signal. Market participants are going to be pretty fickle here, but what I am suggesting by pointing out that the McClellan is oversold is that the upside risks are significant, much more significant than downside risks. This week in particular, we bought a good sized position in the TZA on Thursday. So it was well ahead of the market drop. Into strength, we said, okay, well let's get hedged, let's head some positions, let's take a bunch of stuff off, and let's kind of see what the market does. But this week, I'm willing to play things both ways. Now I have a long bias because according to this indicator that I've used religiously over my career, it's giving me a signal that has usually been right. Most times that I've used it. So I will be looking to unload some more existing long positions, when I do get that bump. And at that point, I'd like to kind of sit back and reevaluate. But for right now, the setup that I'm watching here is going to be in the Russell. Okay, and just like we had in the S&P, we have kind of a defined consolidation range. If the Russell starts to break down and break beneath its 20-day and kind of follow suit and follow the markets down, fine. We're probably going to see some more downside. Next stop in the S&P will be 1600. But if not, if the Russell continues to hold up here, I'm going to be a little bit looking for more buying opportunities, basically. And this week in some of the stocks that I'm watching, I'm not going to get too crazy. I mean, I love what Apple's been doing. And I think there's one good trade left in Apple this year. And one of the things that we're going to emphasize this week, whether we talk longs or shorts, is we're going to talk about volume pockets. And with Apple in particular, you see Apple has very little volume and price structure up above 460. So there's going to be that one trade where when Apple takes off above 460, you want to own it because it's going to go immediately to 500, and it's going to spend the rest of the year between 500 and 460, at least multiple months. I think there's one good trade in Apple this year, and that's the one you want to catch. And Apple has held up, has been very, very resilient, has like a nice positive divergence in that stock. So I'm looking for an entry point and looking to catch the break north of 460 on up to 500. And that's probably not as popular of a trade right now, but that's exactly the reason why I want it. The other here is in Amazon. Amazon was another stock that held the bulk of its gains, and I think if it comes out trying to break away from this balance area, again, structure gets pretty thin overhead, so I think we might see a nice little move back up to 275, 280, maybe even beyond that. I'm a Baidu fanatic here. In fact, for those of you, if you heard me say that the long Baidu, short Google pairs trade is on, that has actually been working pretty well when you look at the spread between the two instruments. I actually like both stocks here, not to pick one or the other, but here's the setup that I'm looking at in Baidu, and a break of this is going to send this up to the next reference point, which is up again to 100. If it breaks above that, next reference point up above is about 107. But I like Google as well because I think Google's easy to manage, and if you take it down to the lower time frame, there's a nice little flag here that it could pop out of. But the thing is I like Google either way here, because if it breaks out of this flag, we're going to see some nice continuation back to the upside. But if it breaks down, it's going to fall like a rock all the way back down to probably as low as 830, 835. So depending on which way it breaks, if it breaks the highs at the end of last week, Wednesday, Thursday, Friday, you want to be long. If it takes out the lows, which go and look at what the market did, and this is one thing I noticed about Google as the S&P melted down. Here's the chart on Friday. Taking out lows, and continued to fall apart. Google didn't. Which I look at little nuances like that as being a little bit more bullish. But again, we'll see. A trade that's very, very easy to manage here, nonetheless. Let me start moving through a few more other things. I blogged about Open and Soda, so that should be no surprise. You guys have seen the setups here. Super easy to manage if they break up or down. Based on the market structure, I like the idea of a pop to the upside, but easy to stop out of if they don't work. MGM has a similar look to both Open and Soda. Same thing. Barnes & Noble is one that I actually like too. It's these kind of patterns that I'm looking for here that will cause pretty sharp reactions in price and are super easy to anticipate. Deckers has been another name that I've been following. Been long that name, but also at a reference point that's super easy to manage from the long side, kind of coiled up here at these prices. But I want to be able to play it both ways too. And if you look at stocks like Sohu, if Sohu starts to roll back down towards this neckline, there's a pretty big volume pocket underneath. And that's one thing I wanted to point out today is if you're looking for stocks to short, if you're looking for stocks to buy puts on, buy the stocks that are in that volume pocket, that have ran up, maybe got a little bit too extended and have a pretty good distance to drop to the next reference point. Sohu, Sina is another one, SINA. Not to pick on all the China stocks, but I actually do. You guys know I like Baidu, but some of these other ones look ready to roll lower. LinkedIn is another one with a perfect example of a volume pocket down below. Nice little flag here to run down to 60, and then on down beneath 60, it's going to be lights out for that stock. And Pandora has a similar profile as well, kind of up here in outer space. If it pulled back a little bit, it could get going pretty fast. So those are a couple of names I like to short. As for the cheap stocks, I'm going to just rip through these. Nice little flag in CLNT BIOL. This is probably one of my favorites. This is my favorite pattern of the year this year, and this thing just looks sick, like it's ready to pop. I'll probably buy that thing first thing out the gates tomorrow morning, just because. DRL, again, another nice little wedge-like formation, good support at the moving averages. AMD, not your typical really exciting stock, but the pattern, these kind of patterns look good to me. I get these things. AMD looks good. PGH, I think I already have this one. No, I don't have it drawn out, but here it is. Super coiled up between all the moving averages, ready for a pop. What am I missing here? Oh yeah, POLR. I don't know, classic pump and dump stock, but this thing might get a little fast from 5 up to about 6.5, so there might be a good day trade in that thing. Another one that I like that is illiquid as hell. It's this SCON, but we've actually made a ton of money in this thing in past years, and I kind of like the way that it's setting up. Damn it. Here we go. Keeping an eye on that. And, oh yeah, my Groupon shares held up really, really well, which is why you should keep a close eye on ZNGA. I'm just saying. Wound up pretty nice. If it pops here, it might follow suit. So, anyways, guys, I've stretched this long enough. This has been The Option Addict. That's been my watch list. Thanks for watching. Have an awesome week.
What these young bloods have to understand, that this game has always been and will always be about buckets.